Hello, hello. I can you guys hear me? For whatever reason, I can't. Hold on, let me check my audio settings. Seems to be okay. Wait.
I can hear you.
Oh, I can hear you now. Okay. Ah, I thought you were saying something, and I was like, I'm not able to hear. So I was trying to check my side of the house. That is my speaker and everything is okay or not. Yeah, looks like it's fine. So what's going on? Anything new, Tom, at your end?
Good question. Good question. Don't know. We'll find out here. Some people are saying that with the swearing in of a new Fed chairman,
Yeah.
historically the market's declined 12% in the next 90 days.
Wow.
But if you drill down into the occurrences of that, the last three times that there's been a new Fed chairman appointed, the declines were much less. Although they were three consecutive declines, they're pretty nominal. One was right after Greenspan got nominated.
Hmm.
Rates were rising at that time. If you recall, that was in the summer, I believe August of 1987, right before the market crash in October. So that was unfortunate for him, but that occurred within 60 days of his swearing in. There was an analyst from Barclays on Friday
Hmm.
expressing concern about that history repeating itself, or at least rhyming. So we'll have to watch. But certainly the market in the last couple of occurrences with Powell and then Yellen, I think the declines over the next 90 days were pretty nominal, like 2 to 5%.
Sure. And I think he was speaking very highly of Alan Greenspan, um, the Kevin Walsh. So, and I think there's something unique that he was sworn in White House, which I guess has happened what first time in 40 years or something. Anyway,
It's interesting you had mentioned Greenspan and Warsh in the same sentence because when Greenspan left office, he wrote a very long book. I believe it was called The Age of Exuberance, if I'm not
the
mistaken.
irrational exuberance.
Well, that was his statement that he made
Yeah.
that is
Oh,
famous associated with him. But he wrote a book, and I think the title of the book was Age of Exuberance, if I'm not mistaken. I could be wrong, but anyway, I read the book, very long. The one takeaway from the book is, for me, was Greenspan's number one indicator was the price of crude oil.
mm.
And because he felt that it was the ultimate litmus test of economic activity and also the need for the Fed to react in response to it because of the impact it had on inflation. So hearing you say that Warsh was a big proponent or fan of Greenspan interests me in that if he liked Greenspan, therefore he followed some of Greenspan's work, then Warsh should be troubled by the higher sticky energy prices and the impact that may have on the
So,
economy.
so I was listening to his speech that he gave after, swearing in, and he did speak highly about Alan Greenspan.
Mhm.
Anyway, we'll see what he has to do. But I think when was sworn in, the market was higher, so maybe market like it. We'll get to know. We'll get to know what happens.
Mhm.
Anyway, we're 5 minutes over the hour. Anyone else? Before we get going on our regular stuff, anyone here joining for the first time? Or regulars? I do see a name. Maybe I don't recognize. Maybe I missed in the previous meeting. Rosh Singh. Rosh, is this your first time, or you've
Hi,
been
yeah,
around?
this is my first time.
So what brings you here, and what kind of?
I'm just interested to learn more about investing and to learn more about charts and technical data and just more interested to know about investing.
have you been investing already?
Yes, I do. Yes.
Okay. And like what kind of investor are you? You've been investing ETFs, individual stocks, long-term swing?
So I do swing and long terms, and I do QQQ for my long terms, Nvidia,
Mhm.
Palantir,
Okay.
and yeah,
Okay.
Microsoft and other tech companies as well.
Cool. What? Welcome. So how did you find us? On the meetup
I
or?
found you guys on Meetup. Yeah,
Oh, welcome.
thank you.
Anyone else here joining for the first time? No. I think, yeah, other names are regulars. All right. So what do you have for today? Hold on. Let me share my screen before we get started. Cool. You guys can see the screen. Just want to make sure I'm sharing the right screen. What do you guys see?
Mega IPO.
IPO. Cool. Thank you. That's the right. Yeah, that's a correct document I want to show. So yeah, the theme is like this week, most of the media was just talking about the biggest IPO of the history that's coming up. Um, I heard that probably they might go IPO in June itself, first half of June, so not that far away. And it's a SpaceX. We'll get into the details of it in terms of the valuations, but I mean, you probably have heard multiple times we are talking about close to $2 trillion of valuation, and there's a lot of money to be made by investment bankers on this one on fee, and I guess a lot of early investors. And I remember a lot of these funds, even my CPA reaching out to me and saying, hey, they have an SPV to invest in like SpaceX and all that stuff. So there'll be a lot of bag holders on this one. A lot of people are trying to, exit this, but it's been the talk of the markets this week is the SpaceX IPO. We've never seen these things before, right? And I mean, this wasn't enough, but this overshadowed the earnings of from the biggest market cap company, which is like Nvidia. And I think it was I found it little mean of Elon Musk to basically make its S1 public right around the time when Nvidia was announcing its earnings. So which was like little say, I mean, you could have done S1 public at any point of a time, but it chose the time when Nvidia was announcing the earnings. So kind of a media was divided uh, between what to follow on. And anyway, so we'll go through that. Yeah, Sam, your hand up. You have a question?
Yeah. Robert Reich. You know who he is, right?
Robert, right now, don't
Well,
recall.
anyways, Dell stock, Dell and probably and Tesla have not gone up since Trump promoted the companies. I mean, Intel has, but I don't. But I really don't think Tesla or Dell have gone up. Dell is more or less around under 80.
So, but Dell over the past few, if I recall, Dell has done good for shareholders or in recent times, right? Because of all this. Um, I don't own Dell, so I don't track it on daily basis.
Well, I just looked at it from when Trump boosted Dell to what the price today, and it's more or less flat.
Or
And I
yeah, I
think
don't know when Trump boosted it, but right now we're looking at it. It's sitting at pretty looks like to be an all-time high to me, around almost $300.
oh,
Uh,
sorry, maybe that was the wrong stock.
yeah, no, this is sitting at $300. And when it comes to Tesla, I mean, Tesla is still trading where it initially traded in between in 2021, around that. Those were crazy valuations. So yeah, Tesla hasn't done much over the last 5 years. If you bought at the peak in 2021, right? But who cares? this stock anyway runs on sentiment. There is no way you can justify the fundamentals of Tesla at the valuation at which it's trading. But that's okay. Narrative is one part of your investment thesis, and there are many investors who want to invest based on narratives. All right, yeah, so we will spend some time on Nvidia, review Nvidia earnings. We'll look at IPO. I also want to give you update on some of the other changes that are done after last week's meeting where we reviewed 13F filing, and quick update on the beta, private beta launch for that option tracker that I talked about earlier. So that's all on today's agenda. Of course, we look at the macro side and other things. Anything else on top of your mind? Any burning topic? Asif says CPS fund for Anthropic was voided. Yes, I think I heard Dario talking about Anthropic saying that all those SPVs, etc., those are not valid shares. And those are the shady business, kind of a. I remember earlier, which other company also, when Robinhood tried to tokenize some of the shares, and I don't recall, was it OpenAI or some other shares wherein the management came and said, "Hey, hold on, these are not issued by us, so we have no role to play in this one." And then Robinhood had to kind of a backtrack that tokenization plan. And yeah, a lot of SPVs now those. I don't know what will happen. Those who invested in Anthropic through that SPVs. I mean, I stayed away anyway. But yeah, funny stuff happens in the market when markets get so hot. Or I would say not the market, but when the individual companies get so hot, we'll see all this drama. I have not explored the SPVs in terms of what those SPVs were looking for. I know some SPVs were floated to buy the shares from the secondary markets, right? And these call option contracts probably, because these are not the real call option contracts which are protected by OCC, these will be more of a contract with some other third party. So you always run the risk of, you always have that counterparty risk, right? So these are like any other business contracts rather than the real call options, because the stock doesn't trade, so there is no so-called call options anyway. All right, so let's dive in on today's. So what do we find today? Quick updates on those who signed up to be the beta users. So you should have received email from me yesterday. So I'm gonna do it in batches. So you'll receive another email once your account is enabled. That will be next week. And then probably I'll use some portion of next week to onboard some of you who have been will be onboarded in the first batch, right? And then over the week, probably I'll have one or two additional sessions to walk you through or if answer any questions, etc., that you may have. So the
Vivek,
first,
sorry, I missed that. The beta for what?
Okay, hold on. Then, so there's a lot of folks, have asked me earlier in terms of how do I stay on top of my positions and, all these 13 Fs, etc. So I'll share. This page has a lot more details.
Okay, thanks.
Okay, yeah. And I think I did share some of the updates in some of the previous meeting. But this is what is consuming most of my time. Building something which the way I want to use it's okay, right? But if you have to say, hey, I have to open it or have others use it, then I have to be really careful in terms of make sure all T's are crossed, all I's are dotted, and all that stuff, because now someone else also will be looking at this, right? So that's what I've been spending over past few months in trying to, make it ready for others to look at it. Otherwise, I mean, for me, it's okay. All right, so on 13F, I want to give a quick update, and then I think that will be our last discussion on 13F. So let me bring that up. So last week we looked at 13F from various themes. I think we probably covered most. But what I also did was, and I think Vinay, that came from you or someone had asked saying, hey, why not look at the overall money flow in terms of, at a theme level, who is buying, who is selling. So there we go. So I pulled in the data, and we have multiple themes, right? And this is currently in production. So I just pulled up, okay, on SaaS, who is buying, who's selling across, these over multiple quarters. So that's the data we're looking at is from Q1 2022 to 2026. Who bought, who sold overall in this quarter. If you look at it, the AUM, not in this quarter, overall from Q1 of 2022 to Q1 of 2026, the AUM under the SaaS companies, the companies that we have in our SaaS teams, it's down 55%. Right? So if you look at it, it's a 55% down. And shouldn't be any surprise. Like these whole last 3 quarters, if you look at it, these are all like SaaSocalypse. 6%, 9%, 35% down from all these. I think this track data of 109 fund managers. So this is what the SaaSocalypse is. And also added one more view to it, which is, okay, now this is a test account, so I don't have any issue. Which is, if you want to see how these fund manager or how the money flow has been happening on your own portfolio, right? You can go and select your own portfolio and tell, okay, who bought, who sold the stuff that you own in your own portfolio, right? So, and you can look at it from a quarterly perspective also, right? Anyway, so that was another thing I wanted to share. What was it? Was there anything else? Oh, yes, one more thing. Or the summary, I also added one more module which talks about top 10 investment themes. And again, no surprises here. In Q1, the biggest dollars is under semiconductor, right? $73 billion is under semiconductor theme. And then, of course, e-commerce, and then energy, food and groceries is number 4, healthcare and fintech and so forth. So these are the top 10 themes based on AUM in Q1, right? And again, this tracks, I think, 109 funds. So instead of looking at an individual company side, I thought it'll be useful for us to look at, okay, which themes, and this is as of Q1 2026 by end of March. Hey, where's these money managers are moving their money or putting their money, right? Which themes are hot or which are not hot, etc. So we're looking at $72 billion semiconductor. And if you click on it, you'll know who has the maximum dollars under this theme. So Q2 management, I'm not surprised because these are the tech investors. They are a crossover investors. They play in the venture capital as well as in the public market, private and public both. And they are big on on especially the chip sector, and I think one of their biggest holding could be Nvidia. And of course, then a belly if it has got Nvidia, then Sands Capital, Tiger Global, so on and so forth. Cool. Any other this? I think one of you asked in a previous meeting around how the money is flowing at a thematic level. So I thought, okay, it'll be useful to look at it. Anything else you want to have before we close out this 13F chapter? All good. All right, so let's James, how to see money flow. So I mean, it's all I'm looking at is, okay, which has the most money in this sector. The other way is also a heat map. If you look at a heat map, they'll tell you, okay, I think this was more interesting. Is from Q2 to quarter one, Max 7, which basically has Nvidia, Microsoft, to Google tickers, Meta, Tesla, how the money has moved from in Q2 2022, they're $233 billion. They're still at 233, now they're 223, right? Semiconductors saw a growth of 300% of AUM from Q2 2022 to Q1. This gives me, even at a thematic level, right, probably give a better picture, which sectors are working. Clean energy over the past, whatever, 4 or 5 years is in AUM is up like 168%. Right. Max 7, not much. What else? Energy is up 21%. AUM, Q1 2026, we 74 to $73 billion, not too much of a difference. But yeah, this is another way to look at a theme level. Look at Q4, most of them were red, the big ones, Q 2022. Again, you can determine whichever way, but look at SaaS. SaaS is down like 51% in the last 4 or 5 years. So this is, again, I define these themes in terms of which tickers constitute these themes and then what goes in this. Something that takes us to back and look at a higher level. Okay. Cool. All right, let's close the 13F chapter now. Anything else on 13F? Nope, all good. All right. I say question is in morality in buying stocks. You have to decide when you buy. I mean, it's up to you. I'm not going to judge anyone. It's if there are some subjects or about which you strongly feel about, don't invest. Don't give your capital to those who don't adhere to the principles that you want them to, right? It's a free market. No one is asking you to invest or not to invest in a particular company. If you're investing in individual companies, if you're investing in an index, then you're bound based on what that index does. Capitalism is inversely proportional to ethics. I don't even know where do you draw the boundary of, what's ethical. What's ethical for one may not be ethical for others. So this will be a never-ending discussion around, where does the ethics start and where does the ethic end. So I think a lot of the companies have probably are happy to stay within the legal boundaries. So as long as it is legal, yeah, why not? Because the ethics could be, it's very subjective. For me, I would not invest in individual company that is engaged in business of cigarettes. Even though the Altria, Marlboro parent company has been one of the best stocks in the stock market over the last 30, 40 years, but it's up to, I don't want to invest in that. But there are a lot of investors who will be okay to invest in it because here, for them, Altria is a great company, right? If you smoke, that's a great company. I just don't want to invest in it because of the ill health effects of smoking, right? But then, yeah, I'll be okay to invest in some liquor company, right? But someone who is a teetotaler would say, oh, it's not ethical to invest in liquor company. So I think it's so I don't bring in too much of a keep my investment and ethics separate. In some cases, I will say, okay, I won't do an individual investment, but if I buy index and that has got Altria in it, probably some of the dividend index will have it, dividend ETF will have it because Altria is a good dividend payer. Yeah, it's okay for me. All right, so chart we're looking at S&P continue to extend its winning streak, like quarter or week over week. So what we had 1, 2, 3, 4, 5, 6, 7, 8 weeks of continuous positive returns on S&P, and I know a lot of investors had capitulated after this whole Middle East conflict, wherein we had multiple weeks of drawdowns in S&P, and now this has been like a just one-way track. Market has been just ripping higher week after week, right? And that's why it is. I don't know. I've said it many times. Been saying it for 6 years. It is impossible to time the market. If you want to be an investor, time in the market is more important. Timing the market, and a lot of us try to time the market, right? Go ahead and try yourself. It keep us engaged. It give us some sugar rush. It helps. It gives an illusion of control, and it works for some, not for me. There are swing traders, there are day traders who can manage it. I'm not just made for that. Okay. So, yeah, Tom, you have your hand up.
Thanks, Vivek. I find that interesting. A consecutive up weeks in a row. Do you have a sense of like what the longest streak's been, maybe in the last 5 years? Has it been 10, 15 weeks? Like how far before you get a reversion to the mean?
I have not looked at that chart.
Okay.
I don't know. In terms of the weekly stretch, how many? Will be a good question. Maybe I'll find it out next week.
Thank you.
How many continuous weeks of positive? I think on Thinkorswim, I do have for individual charts in terms of if I look at a 10-year data, I had a study which will tell me the best period of those 10 years, the continuous maximum number of green candles on the 10 years happened during between these dates. But I think that's on an individual stock I have, but not at a weekly basis. Maybe I'll add that on a Thinkorswim.
Okay, I'm gonna look here as we continue with the meeting. If I find something, I'll put it in the chat. Thank you.
Yeah, but I was surprised that hey, for almost last 8 weeks we had these positive. Jacob says Claude says it's 13 weeks. So if it is Claude, it must be right.
No, the
Thanks.
maximum has been 19 weeks.
Wow.
I heard it on one of the YouTube, a reliable YouTube blogger.
But 19 weeks, do you remember which time period was it? Probably must have been after financial crisis or after a big drawdown.
I can look it up and let you know.
Okay. No, but one thing we all know is that the biggest gainers comes after the bigger, the worst drawdowns, right? So we had these drawdowns, what 5 weeks of continuous negative returns, and now we're looking at 8 weeks, right? I don't know what could happen in the next 2-3 weeks. It could be red, it could be green, who knows? So that's why I don't even try to guess where the market is going. And I thought with the bond yields, like 30-year bond yield was like about 5%. And I saw the intra-week, it was 5%, but market is like, I don't care where the bond yields go. I'm just gonna go rip higher, right? For whatever reason, the market is finding one or the other reason, and it's just climbing the wall of worry. Right? If nothing else, okay, Kevin Walsh is there. We don't know. So what did we have? We had okay, I think we have some economic indicators that came in. We'll talk about that. Maybe let's look at a summary here. So we had a PMI, and we had an input cost rising the fastest pace is 2022, right? So PMI is kind of a precursor of consumer inflation. Basically, this is a purchasing managers index. So those supply chain managers who buy inventory for manufacturing companies is a survey of those, and they are saying that the input cost has gone up, and the input cost of your raw material has gone up. The expectation is that the finished good prices will also become higher, unless company wants to eat up the cost, which probably doesn't happen. And so generally you read this as a precursor or harbinger of what the inflation, the consumer inflation could be. And this one was like because of the Middle East conflict, because of increase in energy prices, we are seeing that the input cost have risen fastest. University of Michigan Consumer Sentiment Index survey was a record low in May. Again, because of and I think we also heard from McDonald's saying the lower strata of consumers, they are struggling. People are making decision between should I buy, X or versus should I fill the gas in my car. So even lower income consumer there, and that's why you see it also reflects in a University of Michigan Consumer Sentiment Index. Housing market was subdued, continued struggling under weight of higher mortgage rates. I think I have a chart for mortgage rates. What happened to the Fed? So treasury yield, we're looking at 10-year treasury yield is like 4.6%. So even if you're happy with making 4.6% with zero risk or as risk-free as you can get in this world, T-bills or 10-year notes are offering 4.6% currently. If you can figure out, got retired, and if I can make 4% and then on the corpus that you have and can live your life off, right? There is absolutely no need to take any risk in the stock market. Right now, Treasury is giving you 5 or 6%. What other chart? Fed policy is better position in 2022. We are looking at it, of course, because the CPI, even though it is higher, but it's been the trend is downwards. But we'll see. I think in the recent notes that came out from the FOMC meeting, their notes were made public, and many of them were cautious in terms of the direction of inflation. Right? And some of them even talked about maybe we should raise interest rates. Right? Forget about interest rate cuts. Right? Maybe we're talking about now raising interest rates. Right? Nothing on the portfolio side. Looking at short-term treasuries, offer yield pickup over cash. And 10-year was like 4.54, and 30-year we're looking at 5%. And like 4% or 10-year also fits perfectly with the traditional withdrawal rate, which your financial planners will tell you, CFPs will tell you, is if you withdraw 4% of every year, and during a retirement, then you can just live off that corpus. You don't need to add any more money, right? So now if you have a 10-year treasury, it's 4.5%. But I know most of us will not do it. Number one, because we are not at that stage. Number two, I can guarantee, even if we are at a stage wherein the 4% yield, we can live off well, we just still won't do it because we want the sugar rush to stay in the market. It's fun to watch the market. It's fun to go. Sometimes it's crazy also. Sometimes it's too much, but it's, what's, why do you look, what's there to look on everyday basis on the stock market if you're not invested in it, right? If you're only invested in treasuries, what are you going to do for your whole day? So we need something to keep us busy. We need something to make us feel good when our stock that we buy go higher and stay engaged. If that's the reason, it's fine. That's the reason I stay.
So I think the other flaw is, Vivek, is that the inflation rate will continue going up, right? So these yields don't keep up with that, while the stock market has a better chance of keeping up with inflation down the line.
That is true. Treasuries, if you look at, let's go to the treasury curve.
And I think the second piece is, if things change, like for a long time, the interest rates went down for a long time, right? So then if that changes, then two things happen. Your yields go down, your income goes down, and then the stock market actually also goes up because of low interest rates,
Yep.
right? Which we saw 10 years back or whatever.
Very true. And I think, I don't know, where's that recent tips? You know where tips are? So if you're looking at where you can get some, the inflation protected. Tips. It's how much is tips offering? Has anyone bought it tips ever? Where can I see some recent tips? 20 most recent in. Oh, there we go. Okay. Oh, they showed it here itself. Right. So if you're worried about inflation, you can buy tips, which will basically, it will be over and above inflation. They'll give you some percent. I never invested in tips, so I don't know how to actually read this data, but because it protects you from inflation, I'm assuming that this interest rate is over and above the inflation is what tips will give. Someone who has invested in tips can correct me. But that's my reading is, hey, this will be, if you invest in tips, this is how you're going to get over and above inflation. But Vinay, you're right. I mean, if you have to really grow it, there is no better way than investing or getting ownership in the best companies in the world, right?
Right.
And fortunately, we have a way to become owner of the best companies by investing and buying the stock of those companies. Like from a key economic data perspective, we talked about so FOMC, like I was saying, majority of participants, they are actually willing to consider a future interest rate hikes. So if this actually become a reality, that will not be good for the market. I'll suck some liquidity out of the market. If your interest rate hike, if you see a hike in interest rate, your fixed income securities will provide you higher interest rates. So instead of 4.5%, you're looking at now 5%, right? And considering that the inflation is at 2.5 or 3%, if your 5% is good enough for you, why to invest in stock market? So generally, if the rates go higher, the stock market does react negatively before it adjusts to the higher rates. PMI, we talked about it. PMI rose, which is highest in 4 years. And then we saw a collapse of consumer confidence. That's also we talked about. What else? Overall, from a fear and greed index perspective, we are still in the greed zone, but at least little less. Then last week, I think last week we were like 63, 64, but we are still in a greed zone. I'll and of course with these whole SpaceX IPOs coming up, and I think OpenAI also wants to um, become public this year. There was a rumor that they will be filing S1 confidentially with the SEC. So I guess a lot of action coming up in the market this year. I don't know. Does that indicate a top or what? But Netscape IPO happened in 95 or 90. When did Netscape go IPO? I'm just trying to check. Netscape IPO. Uh, 95. So maybe we have a few more years. So Tom says I'm Social Security, looking forward to COLA adjustments. Yep. So S1 filing this week. So we had SpaceX that filed almost 500 pages long S1 document. And if you go through it, obviously it's as sometime, and it's filled of long pages of images as well. So it's really difficult to sift through it and find out what's really we want to talk about. So here I want to give you a quick summary of they plan to raise close to 75 to 80 billion dollar. I think this is the max. This is either is going to be the biggest or the second biggest IPO in terms of funds being raised. I think Alibaba raised some $75 billion way back, and or maybe this is the biggest one. From a valuation perspective, this is for sure the biggest IPO in terms of at what price this company gonna go IPO. Prior to this, that record was held by Aramco, which is a Saudi government oil company, and of course that doesn't trade on US exchanges, so you can discount some of that stuff. That's not really that public as or trade in open public market as the US capital markets are. But I think that IPO'd at trillion or a trillion and a half. But SpaceX probably is gonna be a bigger one. And NASDAQ has been finally won the deal, and we know that NASDAQ as well as NYSE both were fighting to get listing business for SpaceX. And why not? There's a lot of money to be made, and you like it or not, NASDAQ bent backwards and gave them, I think, basically they changed the rules in terms of how and when the company gets included in the QQQs, so that the SpaceX gets included in QQQ much sooner than any other company historically has been. So they basically changed the rules just for SpaceX. And there was rumor that even S&P 500 Standard and Poor's were also planning to maybe amend the rule. Right? So these indexes issuers or those companies who basically create these indexes have some sort of guidelines. Based on that, only they will include a company into an index. Right? I don't know what the QQQ guidelines are, but let's say your Standard and Poor's, they have a guideline that a company needs to have 4 consecutive quarters of GAAP positive income before they include it in S1, right? Oh, sorry, before they include it in S&P 500. Right? There are some restrictions in terms of how much of the company's share should be available as a free float, right? there used to be some conditions around the governance in terms of the stock, the class of shares. I think after, I think maybe S&P still have it, but Nasdaq had relaxed that condition when Google came IPO, because Google was the first one to come IPO with some dual class share structure, and Nasdaq really wanted that deal, so they did away with the uh, with with the restrictions on dual class shares. And then later on, I think even other exchanges also relax that. Anyway, so all exchanges as well as maybe some of these index issuers are bending the rules to get S1 into that index. And reason is, a lot of money will be passive money, which is now almost like 50% of the investment is happening passively. Is we don't look at what the company valuation is. Yeah, if it is an S&P 500, we're going to invest in an S&P 500, right? And imagine the trillions of dollars that are getting invested in retirement accounts in QQQ or in SN or SPY. These are some of the big indices which are included in many retirement plans, right? And all that, once you include, let's say, SpaceX into it, all that passive money just gonna flow to the SpaceX. Basically, you will be buying SpaceX at whatever the current valuation is. You have no say. If you are buying an index or index ETF, yeah, you can't buy an index. Basically, if you're buying either a mutual fund or an ETF, which is based on a particular index, you have no say in terms of what gets included in it. So if SpaceX is a part of it, whether you like its valuation or not, you're owner of SpaceX. Right? It's a good as well as bad thing, right? Hey, I want to own SpaceX, but I don't want to, maybe a small portion of it. Yeah, QQQ will have SpaceX in it. Instead of you taking the individual position. And I think the lead underwriter was Goldman Sachs and Morgan Stanley. It's going to be a windfall for these Wall Street banks. Tom says it shows 6 billion revenue for last year. No, yeah, so it's 2025. I have the numbers. I think it's $18 billion was it last year? $18 billion this year. I forgot. I have the numbers. I think, but yeah, you cannot value it at the traditional metrics. Right? There is no way this will make sense. We need to have imagination of Elon Musk and then come up with in terms of what's the growth we are expecting, how big this market can become, how much they need to reinvest, and then we can come up with a valuation. Right? It's not a rocket science. It's just that there will be so much of an future assumptions that need to be baked into it. Right? Or in that case, any other valuation is you see what the current revenue is. You need to have some idea around how the revenue growth gonna happen for next 10 years. I'm just talking about the general DCF process, right? What's the growth gonna happen for next 10 years? And then you say for the terminal, generally you take it as a GDP growth. And then you see, so that'll give you a revenue growth projection. Then you also need to see to achieve that revenue growth, how much they will have to reinvest back in the business, right? And what's the margins that they are able to get through, on this business. You know your revenue number, you know your margins number, so you know what's your operating profits. You also know how much capital investment they have to do. You come with the operating, you basically have your cash flows, and then you discount it back to present day to find out its value. So there is a way in which you can still value SpaceX, but given the paucity of the numbers that we have, a lot more imagination is required. Right? But there is a way to value this. Now, I see someone on YouTube saying, hey, this company should be valued based on price to sales. No, then you're not valuing a company. Let's be very clear. Then you're pricing the company. If you're valuing a company, the valuation has always to be based on what's the what's the free cash flow of eternity discounted to the present value. That's the value of a company. Everything else is pricing. P to E is pricing. We're playing a pricing game. We're not playing a valuation game. Price to sales, it's a pricing. It's in the name itself. But I see a lot of and not just YouTubers. We see a lot of fund managers talking about, oh, I think the valuation is 20 times price to sale. No, that's a pricing is 20 times price to sale. It's not the valuation. You can call it, this is like a nitpicking, but there is a difference. So we can definitely, if we have to value it, then we'll have to do that whole exercise of trying to think through or try to project what the revenue will be, what the operating margins would be, and what's the reinvestment that they will need to achieve that growth. You come up with the cash flows discounted to the present value. Or let's take a little bit easier way or a lazy way, because I don't think I have an imagination of, oh, I can about the, let's say, the space business, because it's a new business. We don't know how much growth gonna be. And then I'll take a lazy way of saying, oh, for a company that grows at 30% year over year for next 10 years, I look at a comparative side and then see, okay, all other comparative company of the similar size are trading at price to sales of whatever 10, 20, 30, or will accord the same stuff. And then we can price the company. But that's a pricing, not really valuation. So let's talk about SpaceX. I don't want to tell who founded it. Basically, Elon Musk founded SpaceX. There are three businesses of this company. One is the satellite business. One is their satellite, which is Starlink, to provide internet connections or the data connections throughout the world wherever the traditional connections are not available, right? Remote areas or somewhere the terrain is so difficult, or while in flight, or in the middle of a sea, or you're on a cruise, right? How to get internet connections? So Starlink is their business, and that's the only cash flow business. It is profitable business and bringing in money, which is then need to be used by a lot of their other two businesses. The other business that they have is a space business, which is basically putting the payloads into space, right? Which is what we know SpaceX mostly for, it's a private company which will deploy satellites of either the governments or other companies into space, right? And the biggest customers are like NASA and US Space Force and others. Third business that I would say became business very recently was the merger of xAI into SpaceX. So xAI is the owner of it also owns Twitter, but that's where the whole Grok stuff is. This is under xAI is what Elon is trying to build Grok, and the EWS, like Elon Web Services, which is will be a competitor to AWS and Azure and your Google Cloud, right? And all that will now become a part of SpaceX, right? So that's where the Elon is building those data centers, like Colossus data centers, and now he's also talking about building a terafab to create their own chips. All that is a part of xAI, and now will get rolled into SpaceX. And now the reason why One reason is definitely because XAI will need a lot of investment. We are seeing all these hyperscalers have committed to almost $750 billion of investment in capex to build these data centers. And if Elon wants to build their own Colossus data centers, it need money, right? XAI, if you really want to compete in this AI model space, you really need big moolah. And of course, the Twitter or X doesn't make much money, right? And Tesla doesn't have like the margins of the cars are anyway crashing down, and Tesla is not a big money maker. So where's the money is going to come from? Let's move it under SpaceX and get SpaceX IPO. You'll have a lot of cash to invest in this new XAI business, which is basically creating data centers. And now, why only data centers on Earth, right? Why only talk about the terrestrial data centers? We're only talking of we are already thinking about data centers in space. So we really look through these three businesses. There is a case that could be made that these are all complementary to each other, right? Elon wants to win in the game of, let's say, AI, for which they need huge data centers and the chips and all that stuff. And who can, what's better way, other than building a data centers, the terrestrial data centers, wherein now we are seeing a lot of some pushbacks in the US itself. Hey, why not build data centers in space? It will be much cheaper to operate because you don't need all that cooling mechanisms stuff and all that stuff. Of course, there will be initial cost of deploying it, and then the governments cannot get control of your data centers. And who is the best one to basically take that payload out to space? It's a SpaceX, right? And then for you to become a dominant player on AI, you want everyone to stay connected, and Starlink is the way. So there is a way in which you could find out synergies between these three businesses and think that come up with a use case where you could say, hey, this individually looking at each individual business, right? This 1.2 trillion dollar valuation might seem way absurd. But if you think these are three businesses controlled by one entity, and then in this case, 2 plus 2 may not be 4, 2 plus 2 may become 6. Because having these three businesses together give a lot more control to Elon Musk, and in terms of how quickly they can achieve. And if you know Elon, he's been he built 2 data centers at a speed never seen before. Right? I think even Jensen Huang came and complimented, saying only Elon can do this. What, some 6 months he built his data center, or maybe even less. I don't remember. It's been a few months, or maybe it was last year. that
Vivek, I had a quick question. Sorry to interrupt,
So-
but does Starlink has a lot of profitability? I've not had a chance to look at this S1, right? So I know that Elon Musk has a great scientific bent and he's a great engineer. But when I look at his businesses, they seem to be failing, right? I don't know how much of a good businessman he is. So, Tesla is a failure in my mind, right? Because their margins are crap, and their self-driving is getting, they're getting beaten by Waymo in a big way.
Yeah.
For self-driving robotic stuff. He keeps on promising stuff, but he never delivers, right? So I'm wondering how much of he's a great engineer for sure, but I don't know how much. I'm trying to understand whether he actually delivers. But even if you look at Twitter, that's a complete failure of a business.
I agree. So first of all,
So I'm just wondering, yeah. And then also there's a lot of competition. He promises all these robotic stuff and humanoids, but I think that's already given to China in my mind, right? They have progressed ahead.
Yeah. So first, I agree that that Elon Musk, he always want you to look at the next shiny object, right?
Exactly.
Yeah.
Yeah.
So especially when it comes to Tesla. So first of all, I don't think Tesla is a failure as a business. Tesla is failed as the valuation that we as an investor accorded it.
Fair enough. Yeah.
Because auto business, if you look at the history of auto business, it's never been a high margin business.
Right.
And so it was just a matter of time that while other companies catch up with Tesla, it's going to return back to, like Michael Mauboussin says, right, base rates. That in the history of automobile business, no company has consistently been able to have operating margins of like 10, 15%. So why would Tesla be any different once the other catch up with it? And that's exactly what happened with Tesla.
Exactly. Yeah.
So I think Tesla was in a business of auto business, and we as an investor didn't think far ahead, like 10, 20, 30 years down the line when every other company will be making EVs. Then what happens? And which is exactly what is happening with Tesla right now. So now Elon is looking at some of the other businesses where they may have a moat. Optimus, China is far ahead in robotics. So I'm not sure. There will be in terms of, there will be some sectors where we will never deploy China-made robots, right? Our critical infrastructure, healthcare, our financial services sector, etc. But would Amazon be okay to have a China-made robots in their warehouse instead of Optimus? Maybe. In the warehouse, maybe. I think a lot of individuals may still be okay. We post pictures of like our whole, like every other minute we are putting pictures and videos on Facebook and Twitter. So I think at individual level, some people may be okay to have a Chinese robots in their home. So I don't know. So I agree there will be a tough competition in terms of on the Optimus side. But this one we'll have to see. SpaceX, is there a moat on the SpaceX? Today it still seems to be. Right? I was reading some numbers that 80% of the space deployments, if you could call it that way, is done by SpaceX. Right? They have the world's 80% market because they've figured out in terms of the whole reusability of the rockets, and that's what has given it a very big differentiation in the mode. Will someone else be able to figure out how to reuse the rockets and become competitive? Sure, but until then they'll enjoy this mode.
Agreed.
It's a hard problem, I guess, right? And I'm not saying that no one will ever be able to do it, but I think right now SpaceX is the only one that have figured it out.
Yeah.
So until no one else figures out, I think they'll have a mode on this one.
Yeah,
right. So other big risk. I mean, if you want to look through the whole report, I have one big let me pull up that report and with the numbers in it, and then we can have a little more detailed discussion. Just give me a moment. Let me pause it. So we're talking about SpaceX. SPAC SpaceX. All right, so let's look at financial performance. Right, so we're looking at overall $18 billion in 2025. Revenue grew $33 billion. But if you look at operating, there's no operating, because it's the capex is huge. They just continue to invest money in their business. Starlink got 8.9 million subscribers. So if you and projected growth, let's say if they're growing 32%, so maybe next year or in 2026, we're expecting them to do $25 billion, right? And still, if you look at $25 billion of revenue for 2026, then we are talking about like almost like 2 trillion means 90, more than around 90 times the sale, right? Somehow I can't wrap my head around it, but you really need to be imaginative and understand, how much growth, let's say, in each of these individual businesses could be, right? I think we're looking at, let me look at their, not the competitors, but yeah, other funny thing I found was that the TAM, like $28.5 trillion of TAM. And these are some of these bombastic numbers. When you look at this, at some part of a time, it also reminds you, like, give you a little bit feeling of a WeWork, right? Here, like Elon is talking about almost, this is like US GDP number, right? $28.5 trillion is my TAM. Space is 370 billion. Out of this $28 trillion, AI is $26 trillion, right? And space, they're looking at $370 billion. Connectivity is $1.6 trillion. There is no information around their addressable market, or how much they can obtain. But these are like bombastic numbers, which Elon is Elon, right? You cannot expect him to provide any realistic numbers anyway.
Yeah, and then look at this, right? Out of that, 22 trillion is in enterprise applications. If you look at the breakdown of the AI TAM, he's saying that
Yeah, 22.7% is in enterprise,
which they don't play in, right?
They have no play in either enterprise or consumer. They have no play in AI right now anyway.
Yeah.
It's all future.
No, but there's no way they're going to play in enterprise apps. They've never been a player in enterprise apps, right? That's a whole different market.
Oh yeah. So, but Elon has cracked into new markets in his history, right? He's always entered into market. There were, at least in an enterprise players, we have other players who are in this market, but Elon has created new markets as well. But yeah, again, I think as an investor, you need to understand in terms of what's included beyond the numbers, right? This $28.5 trillion is just like I don't know what to say about it, man. It's
Right.
just like a crazy numbers. Yeah. Let me see. I think they had provided in terms of the individual segment revenue. Let's see if the Starlink. Do you have a Starlink revenue numbers? Anyway, I'll have to look through it. I did not read through the whole report. But good thing is, because now we have these LLMs, we can ask them to create the report, right? And this is what I guess is the first time I used some of the LLMs to actually generate a report. I used to go and read it, but this is like 500-page S1. I thought, okay, I don't think I'll have a time to read through these 500 pages, but definitely I'll have time to maybe go through these pages. But yeah, you can't make any sense based on the current numbers. It's only you need to look at, let's say if you're talking about space stuff, right? How about space travel? How about if it opens up the market for mining in space? Right? Who other company has a capability to basically take those big mining trucks or the equipment that needed for mining, if we can do mining of whatever materials on space, etc.
Yeah, and that's what I find
We really
interesting.
need to be very imaginative to see what could be possible in next 20 years.
Yeah, and that's what I find interesting. He should have, instead of saying enterprise AI as a TAM, he should have said mining as a TAM, right? So I find it interesting he's not going in those directions.
So no, on the space side, he has only got $370 billion. But I feel maybe there's a lot more opportunity on the space side because it's got a very unique proposition. No other company has the technology to to take the amount of payloads which SpaceX can do. Like, we're not even talking about when a Starship becomes a reality. How about a space travel? Right? stuff. So depending on your imagination, I think we can come up with, and if you become too imaginative, even the 2 trillion valuation might seem small.
Right. Yeah.
So because these are the stuff that we have never seen before. We could never think about it. What could be the possibilities? Now, let's say, if you look at the numbers in the US, like 30%, 30 or 40% of the data center projects that companies are announcing got cancelled. Why? Because of the concerns raised by the local county or because of the regulations. People don't want data centers on their backyard, like the NIMBY effect, etc. And if with AGI becomes reality, if each one of us will be running these AI workloads on our phone, we will need that computing power. What if we can ship all these big Blackwell and Vera Rubin systems or the racks onto the space? What if every other hyperscaler moves on to do that? We don't know. If that becomes good, sure. So in that case, yeah, 2 trillion, not that bad.
I
So
think he strikes me like a magician who keeps you believe in the magic enough to make you pay for the show, something
sure,
like that.
sure. And I think any investment is, I'm of a firm opinion, it's like half is about the future narrative and the half is about the current or the past financials, right? If you're always focused only on the financials, then you will never invest in, let's say, CrowdStrike or Palantir or Amazons of the world or Netflix of the world. They've never seemed cheap in their history, right? So somewhere we also have to think about the future and the narrative and what could be possible, not possible. Some cases, that of course the founders will try to paint a picture that everything is possible, right? I remember when I was reading through the S1 of WeWork, 2021, right? And their mission state model was a vision. And I was like, what the heck? And and when I read through it, I realized, okay, it's a real estate company, and their mission was to raise the world's consciousness. And now you can define your TAM anything. If that is what your mission of your company is, to raise the world consciousness, then tomorrow you can enter into spirituality business. You can become you can start constructing churches and the temples everywhere in the world because you want to raise world consciousness. Anyway, there was a digression, but I have seen some prospectuses wherein the CEOs get too liberal in terms of what they consider as a part of their business, and Elon is one of them. He doesn't think small. Anyway, so there are some things that you need to be aware of if you want to become a shareholder, is that all the valuation is based on someday they will achieve all these things, right? Number two is you have to be comfortable with Elon, because he holds major. I think there is a dual class share structure in this one, which will give Elon like considerable amount of control on this company. There is no way you will be able to, or not you, but let's say even the institutional shareholders will ever be able to fire Elon. And then he can do whatever he wants to do. So, and if he becomes too crazy and you don't like it, you don't have any other choice. You cannot replace Elon. So those are there are some governance things but if you have invested in any of the Elon company, that's always the case. Same is the case with Tesla, Solar City, the internal company dealings. Same is going to be the case with the SpaceX, Tesla, and all other stuff. So this is all basically you're betting on Elon. Well, let me read through some comments. Any guesses on weightage it will get in QQQ? I think QQQ is a markup weighted, right? But again, the way they do it is, I think there's some percent they take and then they do a weighted. So I don't, I read that rule. I don't remember right now, but so we'll see once it get included in it. Tom said price of sales for PLTR is around 65. It is cheaper. It used to be 100. And I know I when I bought that, I'm like, come on, guys, how long? This is crazy. And if you recall, I sold most of my shares on Palantir because I couldn't justify the valuation, right? And I still hold a little bit of it for my scratching my gambling itch, and that's been doing good. I mean, the option premium is amazing on Palantir, so you continuously play with that. But the stock ran up to 200 plus. Now it has corrected $130, like 35 or 130. Right? I still feel it is overvalued or price or based on what their business is or the projections are, but then it's a favorite stock of a lot of retail investors, YouTubers, people who are active on X, so they want to play with it. Sure. Vivek, SPY and QQK are way high. Would you still feel it's okay to put new money in them? I so the way I've been doing is I've been trying to reduce my individual company exposure, and become more on an ETF side. If you don't, again, I think I'm of opinion, if you don't need money for next 3 years, you should still stay invested. It's almost impossible to time the market. And the way you can look at is maybe not, if not on SPY, maybe go a little more diversified and look at maybe a equal weighted or some value, those ETF that are got more value, so-called value companies, right? But over a long term, I think SPY has done some better, but there will be a days in which, or a years in which SPY will underperform because the valuation got too out of whack. Is it going to be this year? I don't know. I thought like 2024 itself, SPY was highly valued, and see 2025 it did another 20% plus. And who knows in 2026? So it's very difficult to time it. I can't tell when you want to put. So I do want to diversify it. And that's why SPY is not like 50% of my portfolio. Right? I also have, let's say, a CHD, which has got more value orientation because it has got a lot more dividend paying companies, more cash flow companies. So I do have, I also invest in emerging markets, etc. So you have to decide. Okay, there are 5,000 other stocks. I'm not drinking the Kool-Aid. Yeah, Rob, yeah, you don't have to, right? You don't have to. But there, like, I don't think there are some people who will find a way to justify it. It's only that it's up. Can they imagine? It's in their story, right? If it doesn't fit your version of a story, don't invest in. But there will be some investor who can come up and give you their version of a story in which what they believe. And if you go through that version of a story, then 2 trillion is justifiable. But I gave you some snippets of that version: is space travel, data centers in space, asteroid mining, right? In the world in which those are possibility, yeah, 2 trillion. I see Tom's reaction, right? But yeah, and I personally don't buy all the stories, but I'm willing to look at what other people are thinking. Right? And if you don't believe, that's would be valuation of that particular investor, may not be mine. Uh, uh, James says SpaceX bought 890 million in Cybertruck. Yeah, nothing. This is the governance stuff that is prevalent in all Elon's companies, right? So I don't think market even cares about it. Suddenly now they will report Cybertruck deliveries up into the $90 million. Who bought it? SpaceX bought it. Right? Who cares? So price to sales for Nvidia is 24x. Any other comment? Sam is asking, do you think Greg Abel in energy focus positive? I mean, if you're looking at it from an energy perspective or energy sector, Greg Abel came from that. Right? Basically, he was the CEO. I don't know if he was a founder, but he was running the American energy company when Berkshire Hathaway bought it. Right? And he made what, $800 million or something. He's a pretty rich guy. Right? So he doesn't have to be the CEO of Berkshire Hathaway to make money. He's already super rich. But I mean, the prestige that comes along with being a CEO of Berkshire, I think that's what drives him. But yeah, if someone understands in Berkshire, someone understands energy, I don't think anyone is better than Greg Abel because he came through that business. From the energy business. Moralizing, what's the deal with space-based data center? It's an absolute fraud on people who don't understand hardware in depth. Hardware design in space is completely different. Yeah, but also, you should also hear Gavin Baker, who is one of very astute investors, especially on the tech side. He thinks that we could see a world in which this could become a reality. Right? I don't know because I don't understand in terms of, how you're gonna harden the chips for the space side and all that stuff. But Gavin Baker was recently on Patrick O'Shaughnessy's podcast, Invest Like the Best. And then he was also on recent All In podcast. Right? So if you want to stay up to date or see where the puck is moving in this all AI stuff or these chips, semiconductor industry, I found Gavin Baker has got wealth of knowledge on this one. Someone better than me can tell. I'm not from that industry, so I'm always looking to find out who are the people who knows this space the best and learn from them. So I would listen to Gavin Baker earlier also, and I found him to be a very credible person. He runs Atreides Capital, and he's been in this space for long. I think he was a semiconductor analyst in his previous job, and then moved on to the money management side. He does think that there is a world in which this is possible. Right? So who am I to question Kevin Baker? Quantifiable talk. Well, anyway, I think there are the two questions. I'll skip that one. Anything else? But this was like a fun IPO. You don't get these kind of S1s very often, right? Or these kind of a company, SpaceX kind of a company, because that itself is unique. Right? And number two is sometimes you might feel, oh my God, this might be a top. When a company that is projecting to make $25 billion is being valued at $2.5 trillion. Oh, we should have seen that this was the top. We'll only get to know in hindsight that this was the top. Who knows? What price you will buy SpaceX at? I'm not going to buy SpaceX unless, I want to give it at least 6 months to a year before I touch SpaceX. I'm not a one who will buy on IPO day. So right now they're cleaning up all the windows, they're cleaning up all their books. I was just listening to another podcast in which a host told that he applied for Starlink connection 2019, 6 years ago. And he said very recently he got an update from this. Hey, now we are available in your area, so want to sign up and all that. Obviously, Starlink wants to get as many customers as they want before they go IPO, right? So now they're cleaning up all the books. They are giving the last push, making sure all the numbers look great before the IPO, before this S1 document. So it's like you're staging the house, you're hiding everything else. You're basically putting a patch where there was a hole in the drywall, just patching it up, make sure it looks good, right? So I don't want to. I don't buy on an IPOs, right? And if it's fun, I think in the future we will get a chance to buy it at good chance to buy it at a reasonable valuation. And if I'm wrong, if SpaceX continue to become a bigger company, I'll buy it later. I watched Amazon didn't buy it, but then eventually I did. Right? So if it is a good company, it will grow bigger, right? Nowadays, like $2 trillion is not a big number anymore. I mean, we become insensitive to trillions nowadays. Nvidia is already $5 trillion company. And Nvidia could become a first company to go $10 trillion. Right? So we live in a different world. Gone are the days where company was coming out with an valuation of $100 billion used to be a big number. Right? Nowadays, we all started. Companies are staying private for way longer. Anyway, so let's talk about Nvidia. Nvidia earnings. Where's my Nvidia earnings document? Hold on. Let's talk about Nvidia. So, $81 billion of revenue, 75% gross margin, 65% operating margin. Right? So these are like software company kind of margins that this company is producing. Right? There is nothing not to like in this business. Right? They are sitting on a $50 billion of cash and have a free cash flow of $48 billion. You can imagine almost 50% of the revenue, or more than a 50% of the revenue gets converted to free cash flow. What a great business this is. And what do they do with this free cash flow then? How much can you even invest, right? Because we have other constraints in terms of energy and all the stuff. So they're going to give their money back to shareholders. So they also announced another $80 billion of share repurchase. I think I'll have some numbers there somewhere. Where's the capital allocation? Not guidance. Yeah. So they announced another $80 billion of share repurchase agreement. So previously, they had $100 billion approved, out of which $39 billion is remaining. This quarter, they bought back $20 billion worth of shares. Why not? The shares are, as compared to other semiconductor chip stocks, the share of Nvidia is like pretty cheap. And they increased their dividend by 25 times. Not right, from 1 cent per share to 25 cents per share. Like 25x. This is important. Right? It means they do have a visibility that they will be able to sustain this dividend in future, or probably forever. Because companies do not want to cut down on their dividends. It reflects very bad on the company. It will be in rare cases, in cases of distress, that the company would like to reduce their dividend. Right? So they have to be really, really sure that I will be able to sustain this going forward in future. Right? Market doesn't take well to the companies that announce dividend, reducing dividend. No, companies have done it because like Disney had to do it during COVID. A lot of companies had to cut back on dividend, and then the market reacted negatively to it. The reason is the dividend. Most of the funds that invest in dividends are owned by people who are retirees, who depend on this dividend income to pay their bills, right? So it's a very bad optics. And last thing the companies would want to do is to announce a dividend and then retract or reduce it, right? So if you're not even sure, don't even pay dividend. Right? And which most of the growth companies, they don't pay dividend because they're like, hey, I want to invest continuously. I want to invest back in my business. So I don't want to pay dividend, because once I start paying dividend, then the market will start expecting, saying, I'm gonna maintain the dividend going forward in eternity. So you are now starting to give a different kind of a signal to the market. And then in some year or some quarter, you can't pay the dividend, your stock get punished. And then at that point of time, you would have thought, gosh, come on, man, I shouldn't have even given the dividend to begin with, right? So the fact that they announced 25, increased the dividend by 25 times, it means, I mean, he's pretty confident of that we will continue to generate this insane amount of cash flows that they have, right? So, I mean, I'm pretty happy about what this quarterly results were. Okay. Looking at the breakup, now they basically added everything, gaming, professional visualization, automotive, everything into new category called edge computing. So now it's difficult for us to do quarter-over-quarter comparison as an investor if you want to do it, because they're not giving you a breakup anymore. So going forward, you'll have only two categories. One is data center, which is where market mostly looks at it. And the other one is edge computing, which is everything else, gaming, automotive, visualization, and all other stuff. About impact of China, again, there are zero shipments of data center products to China. We're not doing anything with China. I know US has said, yeah, sure, you can sell in China. China doesn't want it. They don't want our old chips. They want the latest ones, which US doesn't allow Nvidia to sell. Are you looking at any update on the launch schedule of the chips? Blackwell 300 is ramping. Vera Rubin is the next generation. So basically, it's a CPU and a GPU combined together. And I think Jensen said in a meeting that their CPU business itself is $20 billion business. I don't know how big is it's like competing with these other CPU companies, right? Let's say AMD. So we're looking at AMD yearly is like close to $40 billion business. Right? And the Nvidia is talking about $20 billion just on CPU. Their guidance for the Q1 is around, we are looking at, so this is basically this is a comparison based on their guidance. So we can skip this. Let's look at a next quarter guidance. There's no revenue guidance. They only gave a guidance for actual, so they didn't give any guidance, looks like. Or here we have next quarter, quarter two, $91 billion guidance for next quarter. And again, gross margin is 75%. I mean, this is an amazing business. So I can't wrap my head around that some of the not so great businesses are in the semiconductor industry are trading at a much higher prices, or their price to earnings or price to sales is way higher than Nvidia. Okay. So look at a quarterly trend. I'm looking at 1 year or quarter over 20% revenue growth quarter over quarter, right? Year over year, it's like 85% growth. These are the insane numbers. There's nothing not to like it. Gross profit up 129%. I don't know what to say. 147% operating income growth, 200% net income growth. And you are like, this stock is trading at like S&P valuation. I don't know. Maybe I think market has got a little tired of buying Nvidia and they're looking for something new to buy. But this business is continuously, it continues to amaze me. So it's a great business. Anything on the from an earnings call? No, we talked about this. Any red flags? Of course, China market uncertainty. We don't know when they'll be able to sell it. I mean, there is no red flag because right now nothing is included in China. So if China is approved, it'll be only gonna be a tailwind for them. PC, you saw some softness on PC, right? The consumer demand fell. Other than that, there's nothing much not to like about the business. As long as they can get the chips from TSMC, Nvidia feels that they have a demand. Right? It's just that they just can't get enough from TSMC. In some point of a time, I feel that the TSMC is saving us from getting into bubble territory. But they just can't build the chips fast enough. Any low lights? Nothing. I think, I think the only concern that analysts has were, how long can you continue to grow at such a big rate? Which is true. If you're growing at like 3 triple-digit growth, you cannot sustain forever. Right? Yeah. But I think I'm still bullish about Nvidia. It's a great company, and if you look at not just this quarter, look at a 1 year, 3 year, 5 year, 10 year, 15 year. At least I've not come across many companies where all the boxes are green. Like everything is green in my framework. I don't think there's any company that at least I reviewed where you find all these boxes as green. So it's hard for me to be bearish about Nvidia and what the rest of the market. I don't know why market is not giving it the credit that this company deserve or the stock deserves. Like it's back to 215 after posting great results. Okay, the stock sold off. Whereas we are willing to pay tremendous amount of money to the company which have got mediocre results. But this is what the market is. This is where if you have patience long enough or don't get into FOMO, if you can take some contrarian views, there's money.
Yeah, Vivek, could it also be that because of the new IPOs coming in is sucking a lot of the money from?
So of course, because there is the amount of capital keeps rotating, right? The capital doesn't stay at one place. It keeps rotating. And new IPO coming in, new like people getting FOMO on stuff like Micron, etc. Right? So and there will be investors who actually made money in Nvidia over last 3 years, 4 years. You can't fault them for selling now because hey, already like made 5x in my investment in last 3 years. You're looking at like 20. Let's go. We are what, May, right? We're looking at a May, June. It was like trading at $30. You made 7 times. I can't fault you for selling Nvidia now because also as it's like behavioral investing, right? If you're trying to find funds to invest in, let's say, SpaceX, most of the time we will actually sell our winners because we feel good to basically put the win in the books. Right? You will, and I don't think Wall Street managers are any different. They will sell their winners to generate cash, and we hold on to our losers because we don't want to concede a defeat until they go to zero, and then we say, "Wow, it's all done." So, that's good. So I won't fault them, but it's still an amazing business. Tom says when things appear that they can't get any better, they can only get worse. Yeah. So I think Jensen still says that it's gonna get better. I think analysts can't figure out how far can you continue to post these results. That's a challenge. Sunita is asking, as you showed about Nvidia, can you show that kind on Apple? I had Nvidia at $3. Come on, what are you doing here? Should be at the beach. Hopefully, if you did not sell, let me add that as well. If you kept your Nvidia, first of all, hats off to you, kudos to you that you did not sell. If you just held it from $3 to $200, not many investors can do it. I wouldn't have been able to do it. Right? But so hats off to you if you still hold this. And it's been a great run. Let's do that same stuff for Apple. AAPL. By the way, I have to move this under the optimizer that I have not yet moved. That will be the next phase. Apple revenue growth has slowed down, right? So Apple still has some rents. Nvidia, like revenue growth, last 3 years, 5 years, 10 years. On every other metric, yeah, sure, Apple is equivalent, but the revenue has been slowing in Apple. And not that Apple is a bad company, it's a lot more mature company. Nvidia is still in an area where it is an AI, which is still it's a growth area. So obviously Nvidia revenue is growing. So yeah, it is what it is. This is where it's all in a short term. It is almost impossible to tell why the company is trading at where it is trading. There's so many factors involved. So that's why I just don't want to take up bets for next, like what's going to happen in next 2 months, 6 months. You never know. Like Vinay said, we need money. Institutional managers need money to put in SpaceX. They're going to look into their portfolio and say, what can I sell? Well, I can make this money in Nvidia. Let me sell Nvidia. And then I can, claim that realized profit is so much. So sure, why not? So that's on Nvidia's earnings. So what else you want to talk about? There's some market moving news. We'll look at CPI anyway. Nothing much on Earnings we talked about. Let me see any other company specific news we want to look at. Sector performance. Right. So S&P is still up 10%. And I know, I think it's Tom Lee was saying S&P will go to 730 and then we can get 10-20%, not 20%, I think some maybe 10% correction, etc. before it goes up higher. I also heard other investors saying S&P will go to 750. We never know where the S&P is gonna go, where it's gonna stay. If you buy good companies, hold on to it unless you have a need to sell it. If the business is doing great, these people will figure out how to navigate all these tensions, right? What's happening in the Middle East, etc. I have more faith on, let's say, Sundar Pichai than myself in trying to figure out what's going to happen to Google. So I'll rather give my money to him. Let him make better use of my money. Let Greg Abel make better use of my money. Right? Let Satya do a better use of my money, or Mark Zuckerberg. By the way, this week, if you are dialing in from Silicon Valley, the vibe was not good. Two big companies announced huge layoffs. One is obviously Mark Zuckerberg. Meta did another round of layoffs. And I have some friends, they were not impacted, but they were saying that, dude, this is the vibe is very bad. Everyone is like a little depressed. Meta laid off 10% of its workforce. 10% number may seem low, but it's like 8,000 people. It's not small number of people. It's 8,000 people got laid off. I think it happened across the world. People started getting email at 4 a.m. in the morning, starting with Singapore office. And I don't know what the terms of their severance terms, etc. are. If you're interested, you can look into that. But some people, some of my friends who work in Meta, they told some of the managers have been given a choice to become individual contributors. If they're willing to. Otherwise, for those who have been let go. So if you're active on LinkedIn or etc., you will see a lot of talented folks from Meta now back in the job market. Okay. The other big company that laid off people was Intuit. They laid off 17% of their workforce. They closed down a couple of offices. I think that 17% amounts to maybe 3,000 or 4,000 people. So yeah, this week there are two big layoffs in Valley. The vibes are not good, especially for those who are like more on the middle level manager. Sam, you have a hand up. What's up?
I think about a month ago, remember I asked you about Facebook?
Mhm.
I think a lot of people were assuming that the madness, even though they didn't talk about it, they assumed the China-Singapore thing was good. And I think that's why people said it was undervalued a month ago. Was it a month ago? Yeah. And so do you think that's why Facebook is having such troubles now?
No, I don't think this layoff has anything to do with what the stock price is doing.
Oh no, the stock price though, because they were assuming that Manus was going to go through, but they didn't talk about it.
Yeah, so China has not approved the
No,
managed.
they put it down.
Yeah, China has put it down, but now the company is basically a Singapore headquartered company. It's not a China headquartered company, but China is saying, oh, originally it was founded in China and now moved to Singapore. I don't know how much even that argument holds in, let's say, international code of law. Number two is, how do you even unwind this? What I heard was that the Manus team is already working with Meta, and like they have already transformed into Meta. So I don't know how you want to unwind this. So I don't think the stock price has anything to do with the not having Manus integrated into Meta, because I don't think the stock price actually had jumped when this announcement was done. Meta's its own in-house AI, their Llama, etc. They've been, I mean, they are the decent models for in helping them in their own business. So I don't think the Manus news has anything to do with with the stock price. The stock price is still, I think the concern is, hey, because Mark Zuckerberg is still saying that he's going to continuously spend money on this. It's the capex concern that it has, and this is where the markets, like, I will never be able to understand what market does quarter over quarter. In one quarter, you announce your capex spending, one company will get rewarded. Wow, you're spending capex, you're building, like, generating, building a capacity for AI. It's great. Okay. Meta announces the same thing, or they punish the stock. Meta has in-house use of a ready-made customer for using those AI spending, and the stock doesn't like it. But if you go back to maybe a quarter, like last year, if a company announced AI spending of Meta, the market will like it. So I think it's very subjective to quarter, why the market sold of the stock. And I'm still of opinion that over the last few quarters, Meta has been able to get good ROI on their AI. I wouldn't use the word ROI, but let me say Meta has been able to derive a lot of benefits from their AI in showing relevant ads at much lower cost. So the engagement has been better. The ARPU numbers are looking good, and the AI has been beneficial to their business. Right. Having said that, when, let's say, the consumer is constrained, when we are not spending money, consumer sentiment index tells you that I'm not talking about rich people, I'm talking about a general middle class level consumers are not willing to spend money, then the merchants will pull their advertisement spending, and a lot of small medium merchants use Facebook. So that could be another area wherein, hey, if there is a generally concern around consumer spending, then these advertising company like Meta will get impacted. Google has Google Cloud, right, to compensate for, let's say, the decrease in their advertising revenue. Meta does not have that stuff. So that could be a reason. So if the Google Cloud revenue had not grown up 60%, Google share would have been the same dumpster way, would have been treated in the same way like Meta stock has been treated. It's just that their cloud revenue was up nicely, and market rewarded it. Yeah. Hopefully that answered the question. I'm still bullish on Meta. I think even it was the previous quarter somewhere Meta got punished. I bought some shares, and I've been adding it to Meta, and I talked about it whenever I bought it. Not in recent days. What's the site you use to see this kind of reports on stock? That was my own site. I will integrate this financial dashboard onto the Optimizer itself. So if you want to get access to it, join the wait list, and that will be on a phase 2. It's not yet integrated. Right now, it's only your option trade trackers and how you track to the roles, everything else that is included, and 13F is included. This will get onto the phase 2. Ad related AI is different to AI done by, and ad related AI is also it's dependent on consumer spending. Cool. All right, so that's on log that S&P performance. What else we want to talk about? Any other new charts? I just looked at Fed Watch tool to see where we're looking at. Wow. See, this is crazy. So far, every time in every meeting, whenever I pulled up the Fed Watch tool, you would see the numbers, the blue shades moving towards the left. That the interest rate cuts. Now we're moving towards the right. So for those who are new, as of today, the market is pricing in 42% probability that in December meeting, we will have a rate hike of 25 basis points, not cut, rate hike. 32% probability that the rates will stay the same. I think it's the first time I've seen this moving on right side since 2022. Like we've always been reducing from 5% to always look at the left side. Now we are moving towards the right side. And it is because, hey, market thinks that the Kevin Walsh will not succumb to Trump pressure and will do the right thing. And if inflation continues to stay high, we will have to increase the interest rate to get control. With that means the mortgage rates also taking high. That will not be good for the housing market as such. I can ignore this. Few charts from Charlie Belleo, right? S&P percent change over last 30 years, 828% inflation adjusted. Whereas the value of dollars is down 53%. This is why we have to invest. This is why we just cannot keep the money in the bank account, and it doesn't, the dollar has lost 53% of its purchasing power. You are 53% poorer in 30 years if you kept money under the pillow. If you put your Benjamins under the pillow, you are 50% poor. The number might still be the same, but you're going to get half of the groceries that you used to get. Right? This is another chart, biggest 8-week percent gains from 1950 to May 2026. We are talking about 17.3% gain. The biggest one in 2009, 8-week gain was 30%. Like imagine like the people getting like desperate and giving up on the market. This was the bottom and the market ripped like almost 28% in 2 months. Yeah. So this is not unusual. Where earlier we looked at, oh, so many green weeks. Yeah, we have done it. 2020. This was the COVID stuff. The number 3 was the COVID stuff. Number 5 is a financial recession. I don't know what 74, 75 were. But yeah, it's not the first time. We've done it earlier also. I think this is more important to look at is after these 8 weeks of return, how is the forward return, total returns, like 13%. Right now we're looking, how to even interpret this? I'm just trying to read it through it. S&P 3-month forward total return. This is the 20th biggest gain. Above average forward return 27% over the subsequent year versus 11% in other periods. I don't have to figure out how to read this. But yeah, it's not unusual. And there is a reason, because look at the earnings boom. Our earnings has jumped 23% from 2025 to 2026. So if we continue to earnings drive the share price, long term, that's the mechanism. I don't know what's gonna happen in 1 month, etc. But your earnings is the main driver of your business growth and the share price growth. So earnings grew 23%. Right.
So I'm just, do you know the relationship between earnings growth and GDP growth? It should be related, right?
No, there are some companies, especially in an S&P, is concentrated in the companies that are growing at much higher pace than the GDP, right? Especially S&P
Okay.
500. That's the difference.
Got it.
Like AI companies, their revenue growth is like Nvidia is like growth 100, whatever 100% plus. It's the biggest company. So you're looking at a 500 company, and I don't know, maybe I'll have to Google it or Claude it. I don't know. Maybe in next couple of years, we will not say I'll have to Google it. Let's say I'll have to Claude it to find out in terms of this 23% growth, who are the main contributors to the 23% growth. If I take out let's say the top 10 market cap companies, what happened to the remaining ones? I think that will tell us a little more picture in terms of what's the underbelly of the market. Is it like soft? Is like companies are bleeding money, and at an index level, because we have such great companies who are growing their revenue triple digits, that they skew the average. Right? That could be an interesting data point to look at. But this, yeah, the earnings grew 23%. Tom said, what's the EPS gain? I don't know. I'm hoping maybe Charlie has some chart on it. I've not read through these charts. I just put it just before the meeting. So I'm reading it along with you guys. Big tech. Speaking of big tech, the S&P technology relative strength versus the broad market is at highest level in the history. Woo! This is the tech is now 50% of S&P tech sector is 50% of overall S&P. Gave a pause for concern.
But that's always the case. Like I did research a couple years back, not couple, last year sometime, and it was any point in history, if you look at that, S&P always had the top weight on the top performing industries at that time. So this time, in a point in time, the tech is doing well, and that's why they have the highest weightage.
Yeah, because it is S&P is kind of a momentum index. The company, not the company business, but let's say the share price, higher the share price, more is the weightage it gets. Right? So it's a kind of a momentum kind of an index. So it'll hurt if it goes the other way, it's also gonna hurt as bad. And to your point, that it's always been the case that like the bigger companies form a bigger concentration. But I think in some cases it is justified. When it was around 36%, I reviewed and pulled up the data in terms of the overall earnings of S&P 500, right? So 36% of the S&P 500 earnings, it was 36 or 35% of the S&P 500 earnings were coming from the companies that constituted 36% of the index. So justifiable. What I don't know is is the tech sector contributing 52% of the overall earnings? If it is, then this is justified. But if it is only contributing 25% of the earnings, because when you talk about tech sector, I don't know, there may be a lot more companies in it. If it is contributing 30% to the earnings power of S&P, but the market valuation is 50% S&P, that's what will worry me. And that I don't know. But last year, there was a lot of concern on media around, oh, these top 10 companies are 36% or 40% of the index. It's bad, never happened before. Guys, those top 10 companies contribute 36% of the earnings. So then it is okay. Now, I don't know about the earnings, how much of earnings does the tech sector contribute. If it is closer to 50%, maybe this is okay. In March 2000, that wasn't the case because most of the companies never had any earnings. Right? It was just the valuation. The gap between the earnings power and the valuation is what we need to worry about. So this in isolation looks scary, but maybe we should. Maybe I'll have a claw to figure out. Give me a chart which shows you the difference between the valuation and earnings power for every year. That would be a better chart to look at. Now let's talk about semiconductor. SOX is up 163% over past year and versus 29% gain for S&P. This has also never happened before. Sam, sorry, I didn't see your hand before.
Oh, don't worry about it. Sorry, I was coughing with my. But when AI came out about a year ago, I thought of it like controlling. AI is not good in the fact that it's controlling the narrative. In 2016, the reason that Clinton lost the race was because everybody was caught up in Facebook news. Remember?
Yeah, but let's we talk about it better. It is, I don't know. I mean, whether it's AI or tech in general.
Well, so therefore, because I thought AI would be perfect for the Chinese Communist Party, because they have the China state media to control the dialogue in the country. And so I'd rather stick with a Google search because it allows that we don't get stuck in a way of thinking.
Oh, no. So, okay. So, yeah, don't outsource your thinking to AI. That's I would say use AI. I think people have asked me. So why don't you use this Claude, etc., to tell you what to buy? I said, I use them to give me all the information. I want to make my own analysis and then see whether to buy or not. Obviously, it doesn't understand what else I have in portfolio, etc. But what differentiates humans from machines is now I think in a few years probably that won't be the case anymore. We can still think through it and reason it, but now these models are becoming better. I don't want to outsource my thinking process, but I do want to outsource everything to AI, any manual work to AI. And I'm serious about it, right? I would rather spend that time in doing other stuff or do the more of what I love to do rather than trying to, let's say, read through 500 page of S1, right? So the S1 document, not the document, but the HTML that I pulled up, I had AI generate it for me, but I gave specific questions to AI. I want to know what are the risk factors. I want to know what are the governance issues. I want to know what are the third-party transactions that they have done. I want to know XYZ things. I just didn't give AI, hey, can you review this S1? I gave a very specific set of questions to them. It saved me going through 500 pages of S1. And I would have missed many of them, right? First of all, I would have just given up on S1. Who's gonna read 500 pages anyway? But I can read 10 pages or 20 pages of summary that AI has generated for me based on the instructions that I gave you without hallucination. I will love AI. I mean, I love that AI. Made it easier for me. Now I can review a lot more S1s, which earlier I wasn't able to. So that I feel that's the power that AI or these models will give us, provided we don't let them run loose. But they can go anywhere. James, railroads were 50% index in 1920. You're absolutely right. And then everything crashed. Right. So again, I think my point is that just looking at what concentration of index is not enough. We should also look at how much of the earnings they're contributing to that index. By the way, US is not the concentrated market. There are, and sometimes ago I shared a chart in terms of the concentration in other markets. US is far below. Talk about, let's say, Taiwanese market, Korean markets. I don't know, TSM is how big in the Taiwanese market? Let's ask, right? What percent of Taiwan market is TSM stock? 40%. One company is 40%. One company is 40% of the market. Right? There are many markets that are a lot more concentrated, but maybe TSM contribute that much to the, again, I don't know. I don't know what's the overall contribution of TSMC to the earnings power is. Now we're looking at, in our case, 9%. Nvidia is 9%. There are many markets that are a lot more concentrated than US. But we always talk about, oh, historically, that thing has never happened. But historically, some of those companies never had that earnings power also. And in that case, these were unjustifiable. Again, I'm not saying 50% is justifiable. All I'm saying is I don't know how much is an earnings are they contributing. If the earnings contribution is 25%, this is damn not justifiable. But if earning contribution is 50%, why not? I think 50% of an index, sure, I can justify that. That's the difference. Semiconductor, same thing. Total returns of SOXX over the last year, we talked about 163%. Bond market is high. This is a weird time we are looking at. None of the traditional investing wisdom applies today. Bond rates are high. Inflation is high. Consumer is feeling a pinch. And the stock market is still all-time high. Right? And we are having geopolitical conflicts. And we are having a war in Ukraine, Russia, and in Middle East. And we are having a midterm elections. Right. This is a headline CPI year-over-year change. This has gone up, that we do. CPI from January 2020 to April 2026 is 4.1% annualized. Wow. And our Fed target rate is 2%. Right. Never met the target rate. Annualized itself is 4.1%. We'll talk about inflation. Commodities 1 year change, silver 128%, heating on 95%. Coffee, cocoa has come down. I remember the times when the coffee prices were going through the roof. Now they have cooled down. There'll be time when these things will cool down as well. What other chart Charlie has? Gas price comparison. 4.56. National gas price. Okay, better than what I am paying. Index move hike will looked at today. Okay, how do I read this? The bond market is now pricing in a Fed rate hike by 2026. Yeah, that's what we looked at. We're looking at a 25 basis point hike instead of a cut. Grumpy consumer is still spending. Even though we are grumpy, consumer sentiment index is never been lower than it is today. But does that mean spending less? Retail sales grew 5.2%. Right. So sentiment is bad, but looks like still some spending is happening. But this is the worst sentiment. I did not know about this. That is the worst since 1960s. Where's the money consumers getting to spend this with such a bad sentiment? Okay, loss of purchasing power. We looked at already 35 consecutive positive months. US real average hourly earnings, and then start to decline. This is basically inflation adjusted, which this will pinch. If it stays low, it is gonna pinch, then we'll not see retail sales going up 5% anymore. Cool. Those are some other charts from Charlie. He always brings in good charts. All right, so that's all I have for today. What did I buy or sell this week? I forgot to mention it, but I had a BlackBerry shares and had a covered call on it, and that got assigned. BlackBerry been holding these shares for quite some time now, 6 years, and they got the next level of a FedRAMP certification and some contracts. So market got I get bullish about it, and I had some stocks which I had which got called away. So be it. I still own BlackBerry, and will put another covered call maybe at $8. Let a little bit more could get called away. It's fine. I still hold the remaining. That was, I think, the only stock transaction I had. Cool. All right, what else you want to talk about? Otherwise, I'll open it up into the breakout rooms, and then we can get detailed into any other topic that's any specific person wants to go through. Or if you want me to look at 13Fs, etc., I can spend some time. I can be around for another 30 minutes. But we're done with the regular stuff. I will stop recording and I will open the breakout rooms. Long weekend. Oh, I didn't realize. Thank you. Oh, we're not going anywhere. How come kids didn't tell? And I forgot about Memorial Day. No market Monday. All right. So anyway, I have a lot of stuff that I'm working on. So give me some time to focus over there, because I've been dividing my time between market and building. So yeah, then I'll spend whole Monday on working on other stuff. All right, let me open up the breakout rooms.